Hi guys, did an exercise last week in the group mentoring channel. I plotted every single level I saw on every single currency pair for a whole week. Live streamed every morning, so no fancy editing. I put the information out there in the morning and then in the evening we reviewed the data. The results were 64 levels were hit, 6 failed, 58 worked. So that's a 90.6% success rate. Now, the 6 that failed, all in market flow environments. There was some yen trades that failed. That's because yen was strong and it was a New Zealand yen and a CAD yen. Both failed. Yen isn't going to stop against CAD or New Zealand dollar just because you've got a level on that chart. When there's flows occurring, you've got to find out what's driving the market and then find out where that's going to stop. The other ones all failed on US inflation. We had a volatile market reaction to that and the levels were smashed. So if you know when to trade normal and when to be in defensive mode, you could easily avoid those losses. It's the most important part of what I teach to people in the group mentoring channel is when to trade normally and when to trade defensively. And there is an aggressive side as well, which is more advanced, but that's for later down the line. But it's really important to know when to not trade and when to go with defensive entries. So the important thing about this whole exercise, it just shows that levels are the reference for the market. That is how the markets work. But a lot of people, especially new traders, would look at that success rate and they would instantly think, oh, I can take more trades, I can make more money, I can do more pips. But remember in a few videos previously I said everything about trading when you start is counterintuitive. Whatever you think, it's usually the opposite is the truth. So if you think that 90.6% of these levels worked, now the only trades that I take myself are overextended moves into strong daily levels. And overextended, it generally means that the pair is near its average range for the day. So now if I can get into the market in these areas and 90.6% of my levels are working, when I'm getting in, the next level I get to, there's a 90.6% chance that the price is going to bounce. So everything as well comes back to emotional control. Now if you're in a trade that's in profit and it's coming down to a level and then your profit starts dwindling and going back to zero, that's when you start panicking, put your stop loss to break even or you take a loss. But what you really should be doing is get into the market in the strong areas, and then when it comes down to these levels, we use these levels as areas of potential struggle. So when you get to the first area of potential struggle, you take some profit, and then if the market does go back, it doesn't matter because you've already made some money. Now if you get into the market in a good position and then it comes down to a level or up to a level and you don't secure, what are your options? You're either going to make some money, make no money, or lose some money. Now if you get into the market in a good area and take profit in your first area of potential struggle, what are your options then? So you've made some money already, and your options now are you're going to make more money or you're not going to make any more money. Those two options for a new trader that needs emotional control, that is the best option by a mile. So the whole exercise was literally a roundabout way to make traders ensure that they secure profits. It wasn't to make people think that there's more entries, but I'll digress because the results were so strong that there's definitely something to be done around this. So I am going to be developing an intraday strategy just to go alongside my normal trading style, because it's so successful that I'm stupid not to look into it. But as soon as it starts affecting my emotional balance, then I'll just bin it. But for now, I am going to try and develop something around it with the people in the group mentoring channel. And if you want to see the streams, the live streams, they're all on the website in the members area. 4.5 hours worth of video from last week, plotting the levels and then reviewing the levels and then a review at the end of the week. So I'll be doing the same exercise again next month, but it won't just be seeing how the market reacts, because the market some levels the market only reacted 10 pips, some it reacted 400 pips. But it wasn't actually about that, it was just about testing how the levels I see in the markets perform. Because another trader might see things differently. So that's why I always go on about a strategy, that one strategy isn't suitable for every single person. You've got to take the principles of these strategies and then test them. And this is the only way to do it, by doing exercises like this. And it amazes me that nobody else does it, nobody pushes it. And I believe that it's because they just don't have the confidence in the strategy that they push. But you know, the results are there to see, live, no fancy editing, all in the members area. If you want to watch the videos, there's a link below to join. I'll add you in the Telegram channel. It's for me, if you've been struggling with your trading and you need to make changes, this process is the only way to go. It's everything comes down to journaling, because that's what it is. This is how I journal. Everything comes down to journaling. How the market reacts to what you see, and how you react to what you see in the markets. They both go hand in hand. And over the weeks, we're going to develop the full journaling program, and we're doing it live. And there's no, like I said, there's no fancy editing. It's all just how a trader should develop. Taking enough of your time. If you want to join, there's a link below. Have a good one.